Good morning from Izmir, Turkey. It's 25th of July, 2024, uh, and it's a Thursday, just one day before Friday, which is famous for being a stock crash day. Normally, Fridays or Mondays. This time, I think it's occurring on a Thursday night, or it started on a Wednesday night. We will see how far it will go. There is a huge stock crash all over the world right now. That's why I'm making this video, my monthly video in English. So before I even make this morning's video in Turkish. So let me go with some what's happening around the world, why it's happening around the world, so that everybody is informed about it. This video is in English, so I will make a Arkadaşlar daha sonra Türkçe video yapacağım. Bu video İngilizce ama öbür kanalda yayınladığım için sizi şaşırtabilir. İstiyorsanız bir sonraki yayını izleyin. Bu kısa sürecek, 15 dakika. Yes, I had to explain it in Turkish because I made it on the wrong channel, my Turkish channel. So because it's live, I cannot change it at this moment. Let me see if I can change it this moment. No, I can't. So, okay, what's happening now? I'd like to show you what's happening around the world. It's a huge change. The gold is falling, like silver is falling, like from everything, and the stocks and stock exchanges all over the world are falling down. Currencies of Japanese and Swiss are increasing in value because people are running away. So that's the title of the cover. If everyone is running away in the forest, if all the animals are running away at once, that means there is fire in the forest. So there is fire in all markets right now. I just want to explain why this is happening. Once before the recession starts, the news of the small, actually the Google and Tesla actual results weren't so bad. They were just ready to accept them as very bad. And especially Google results were all positive, all on the waiting side. But they have to find something to blame. So they had to blame Google and the results of the Tesla. Tesla dropped about 15% in one day, and Google even dropped about 6%, first in the US market. Then this fire reached the Asian markets, and the Japanese stocks are tumbling very fast. I like to show you some titles which are exactly of this moment. Okay, Asian stocks tumble as tech rout spills over. China shares testing 5-month lows, as you can see on the investing terminal. And yeah, very sad guy, losing big, See, Tesla is down 12%. Google is down 5%. These are just individual shares. But then we will see the other heavy tech Asian bourses close performing on Japan. Nikkei losing about 2.7. I think it's above 3% right now. I will show you. The South Korean Kospi slid 1.8%. So memory chip giant Hynix tumbled nearly 10%. Hynix, the chip giant. So Hong Kong Hang Seng is tumbled about 2%. This is just in the early opening hours. Chinese internet giants track loss as their US peers. So it's a worldwide situation. So and now I will go to another site, which is the X, to explain you what's going on. Okay. As you see here, Peter Schiff also made an account. Gold and silver are selling off too. This 31 minutes ago. The markets are about to price in a hard landing. The key is, will the Fed allow that to happen, or will it deliver the one thing that can stop a full-blown stock market crash? This crash may not just stay at 2-3%. It may crash down even up to 20-30%. in a very short while, including a financial crisis and recession before the election. That's what Peter is saying. Peter also and others are also reporting, as you can see in Game of Trade, yield curve steepening from an inversion is the recession signal. This is exactly where the stage we are nearing. And you see these gray areas are the big recession times. So they had the similar move just before all recessions, coming down and going all the way up through the recession, steepening of the inversion. As you see, right now, this is the furthest bottom we ever seen. So this may be the worst recession of all time. So that's why be ready. This is showing on a graph. Okay, U.S. small caps are over 7% over the last trading days, while the U.S. large cap means the big companies with very large capitalization value, market value. So they are down 4. And this 11% spread is the largest 10-day small gap over performance ever, not in this year, okay, 2020, 2016. So there is big difference between the small cap companies, which did not increase very well at all, and only the large caps pulled the market ahead. So this is where we are seeing. And okay, I like to, okay, breaking S&P, this is 7 hours ago. S&P 500 had officially closed the day 2.3% lower, ending its longest streak ever with a 2% decline. Okay, now I will go back to StreamYard again. Okay, just making sure that I'm sharing the same page on the StreamYard. Okay, now we are on that page where Asian stocks are. Now we will go to this section where I'm going to show you the markets and the stocks, indices, stock indices, major indices, so to see what's the latest situation overall in the stock market. I have to reduce the size here. There's a problem, so you can see the change and the amounts. As you see, Dow Jones was 1.25% down. Yes, okay. Dow Jones was 1.25% down. S&P 500 was 2.31 down last night, and Nasdaq was down 3.64 in 1 day. This is a 1-day loss of the whole index. And small caps are also down, but 2.16, better than the Nasdaq technology stocks, but a little better than S&P 500. But it's a general, you can tell this is a general situation, not an individual situation. And we are now looking at, besides the European stocks, which were all red, we are looking now at the Asian stocks. As you see, China is down, and Kospi, that's a Korean stock exchange, and Hang Seng is 1.5% down. Shanghai, here it shows only 5.55 down. This is Korea, Kospi is Korean index. Okay, and so we'll see where it gets. The market movers, these are from last night. Okay, also indices are here from last night. Dollar is 103.96 dollar index. Okay, and commodities, for commodities, we can see Brent crude oil is down about 1%. Gold is down 1.73%. Silver 4.22. Copper was already down, and it's down another 0.5%, which means recession. You know, it's called Dr. Copper, where it measures the whether there is recession or the markets are good. If copper is not losing a lot, that means there is a big recession, because copper signals the usage of industry. And the bonds and stocks, bonds should rise because people are now running to U.S. and government bonds, because there is a well, so-called, they call it secure. I don't think they are secure. They will print and pay at least, if things go too bad. So they will, and so if the interest rates go down in bonds, US bonds, it means there is demand, okay? There's a opposite correlation. If interest rates fall, like here, half a point on each of 5-year, 10-year, 30-year, that means there is a demand for bonds because they are secure. They'll give you 4.5%. Even the world goes down into the garbage trash can. Okay, and bonds. Here we saw stocks. Maybe Tesla is down 12%. Google is 5%. I already mentioned these to you. So just wanted to explain here. Why is gold and silver are also down? They were supposed to be protectionists, as you know. The problem is the people who have short positions, they have to close them. They're on loan, okay? They're very high interest, so they have to find cash, quick cash. So that's why they throw anything they find to the fire. And first and most cashable items are gold, silver, and even crypto coins. They will try to cash everything. So how is it going to affect the Turkish market? Negatively, because if there were any foreigners, they will start selling their stocks and they will start to move their money back to close their positions, their loans. Okay, this is worldwide situation. We will see if it can be stopped. If Fed officials come out and say they are thinking it's time to increase the interest, decrease the interest rates from 5%, just like Canada did yesterday. For the second time, Europe already decreased it once, but I think they are too late. That's the situation because the recession was already measured to come, and now it's here. There was Professor Steve Hanke and his partners calculated this recession long time ago. In fact, it's later than they assumed because they said they did not calculate the effect of the money distributed during COVID, where people had more cash on hand. Right now, as we all know, the credit card are exploding in the US, loans are exploding. So this is the situation, and there were many signals of a recession coming, but nobody wants to accept it because there is good money to be made. This is why I always advise my followers in Turkey to be in a basket of goods. If one drops, the other one could at least save some of it. Otherwise, just investing in one thing, which is very risky to make a lot of money, is especially risky. That's why when you are older, you should have more bonds and not as many stocks in your portfolio. Okay, and so this is the situation. Okay, this is a short video just to explain you what's going on around the world, why gold and silver are also falling in value with the stock markets, because they need cash, and cash needs to be for the closing the short positions. Okay, so this may go wilder if this continues and not they don't receive quick responses. This may go wilder in all markets. So that's my warning. The Australian dollar, which is commodity, is losing value. The safe haven, so-called safe haven, as currencies like yen, is getting more valuable. Instead of 165, it were down to 153, and also Swiss franc is rising because of this shift from one currency to another. As I said, the similar for the U.S. government bonds. Okay, so I wish this all works out to you and you didn't invest in one thing in the stock market alone. Don't worry if you're invested in gold and silver as much as your assets in the market, stock exchange, okay? Because as I explained you, this is of a short-term money need. Not that they don't need gold, they don't want silver. It's the opposite. They are using their tools to close down their losses in the other side. Okay, I hope you enjoy your day. In any case, Life is going on. These markets will come up in time. There is no rush. They may go further down. Don't be rush selling, but you can take positions unless Fed comes up with a, I will drop the rates very soon type of one, because if they do, then stock market may bounce back quickly. So you should be careful in your positions. Maybe my 50-50, half and half idea is better at this time. Maybe selling only some portion of them and not all of them, okay? I'm not talking about gold and silver. As I said, if you need cash very soon, as I always reported, be on already cash in the money markets. If you are going to buy some house, a car, never invest for the very short term, like 1 month, 3 months. Then, because you may be on the reverse side, no matter what you invest in. So if you already made a deal, or you are very close to making a deal on a house or something, stay in the money market funds, just so that you can buy that thing. Otherwise, something may drop 10-20% overnight. Okay, be careful. Otherwise, it's a good opportunity. There will be more opportunity. Don't rush into buying, because the markets and every commodities are dipping. Don't rush. There may be more to come. If you're going to buy, if you have too much money to buy in intervals. Don't buy all at once, thinking this is the best value. There may be better values for dip buyers. Okay, so just keep following the dip by buying in small amounts, by nibbling. Okay, nibble at all rates. Okay, I wish you all a nice day. Bye bye.